I think that as investors, and when they hear that you're in multifamily, and I've been in the locker room and hearing women say, I just got kicked out of my apartment because they raised the rents $500. Now, for people who are paying the rents, that could be difficult. But as an investor, kind of walk us through maybe some of that negative concern of apartment owners from the public side, but from an investor side, it is certainly an positive. How do you have that conversation? Because when people say, I'm a syndicator or I am in buying investment, I invest in apartments, and people say, oh, my friend just got hers raised, people look down on us, and it's really unfortunate. So how do you have those conversations with investors or people that you're introducing what you do?
Yeah. I can approach that from a few different angles. I gave the example of a $1 million apartment building. To most people, that seems like an unspeakable luxury, and perhaps only a wealthy person could own something like that. But when you leverage your dollars, I mean, like the $200K down payment for that $1 million building, you probably got that from equity growth through a 1031 exchange in another property where you made a small down payment. So leverage really amplifies your wealth faster than compound interest. So you sure don't have to be born with a silver spoon to own a $1 million apartment building. I don't think many tenants are going to understand what I just said right there. So I don't think that's the best approach with tenants. That's just me speaking to you. If you're new to real estate investing and $1 million building just seems untouchable, it's really not that untouchable or that far away.
Very good point on that.
Yeah.
Very good point. Yeah.
Okay. Well, back when I was my own landlord on that fourplex building before I had professional management, one thing I learned is most tenants don't realize that I have a mortgage on the property. They don't know that. I found a subtle way to tenants. Again, this is back in the face-to-face days, knock on the door, collect the rent. I found a subtle way to say, like, yeah, I do have a mortgage to pay every month. So yeah, I'm really hoping, I can't have your payment be late. They don't know that. They don't understand that. You've got this big debt load of $500K debt to pay off. They don't understand that. But really today, professionally, where I'm a layer removed and I have a property manager between the tenants and I, really the most professional way to do it is just an unemotional sort of statement, just to say that your property taxes have hiked up 6% year over year. Your property insurance, which is becoming a real problem in places, has maybe hiked up 80% year over year. If you're in a place like California or Louisiana or Florida, I've had astounding increases. So really the unemotional thing to do is to talk about how your expenses have increased. It's the truth, it matters, and a tenant can understand that.
Absolutely. Really great ideas there. Okay. I'm on the debt side. Interest rates have gone up considerably, as I mentioned earlier. Tell me more about your thoughts on interest rates, where we're going. What are your, do you think that the market is going to continue to increase? Where do you sit on interest rates?
I don't make mortgage rate predictions because I found it's a fantastic way to be wrong.
Yeah.
I do make Get Rich Education's annual home price appreciation forecast each year in December before the next year begins, and I've had really good success there. By the way, back in December of 2022, I said it would be 0% appreciation for 2023, not a decline, not an increase. We're just talking about single family home values here on that one. Maybe if you're new here, you don't understand, or it might seem inconceivable to you, that even though mortgage rates have almost tripled from where they bottomed out nearly 3 years ago, mortgage rates are just historically average. For a single family home, they peaked at over 18% in October of 1981, and they're still less than half of that. One thing that you can do with the direction of mortgage rates to help you forecast where other things in the economy are moving, including the direction of real estate, is sort of divorcing this notion of thinking that mortgage interest rates have something to do with property prices. And I'm talking specifically about the 1 to 4 unit space here, okay? I don't have any of those stories of multifamily commercial loans where I got variable rate debt and I did not buy a rate cap, which is making a lot of syndicators blow up. I don't have that story. My sad story is the market story of Anchorage that I got out of, that I told you about. Here's the thing that's really inconceivable to some people. When mortgage rates rise, expect home prices to rise. You actually heard me correctly. on that one. And this seems unfathomable to a lot of people. When I share this with a PhD economist that I have on my show, often they understand that that makes sense to them, but this often blows away real estate people. Well, how could that be true? Doesn't anyone know that when rates rise, I mean, that makes payments go up, and people actually buy homes more based on a payment than a price, so affordability comes down. So of course prices come down. Well, when's the last time when mortgage rates rose, home prices rose? How about right now? What's going on right now? Late 2021 it happened. All of 2022 it happened, and in 2023 it happened. In late 2022, some West Coast markets had a little dip in prices, and I have an image to support what I'm saying, that when mortgage rates rise, home prices rise. These are nominal house prices when mortgage rates rise. Okay, so what you're seeing along the bottom is the number of months. On the left there on the y-axis, that's the change in prices, and those lines, those 7 colored lines, denote the change in prices. Okay, so mortgage rates have increased 1% or more 7 times in the last 30 years. You're looking at all 7, and you're looking what home prices did each of those 7 times. They rose every single time. But most people think that when mortgage rates rise, home prices fall. It's paradoxical. It's counterintuitive. These are the facts. And I think it's easy to have a hunch that when rates rise, prices fall. But like I often say, I take history over hunches. When I try to predict what might happen next, I look at history first. And this is some amazing history. 7 of the last 7. Notice that some of these price gains are rather small, though. And this is nominal house prices. Like it says at the top, nominal means in name only. So it's not adjusted for inflation. So yeah, expect to kind of see a small rise in a rising mortgage rate environment. All right, well, how can that be? Doesn't that seem like the most improbable thing ever? This is one of those things where I was telling you earlier that you're going to hear things that you didn't expect to hear today, like stop looking at properties. And when rates rise, prices rise. How can that possibly be? Well, first of all, there are some lag effects in the economy. It takes time for things to catch up and for cycles to mature, but this can't be completely explained with lag effects, because we need to understand what's happening in the economy when the Fed's raising rates. Usually the Fed's saying the economy's hot and it has to cool off. We have high employment. We have good GDP growth. We have inflationary factors. And this means things like what's emblematic right now. We actually have more open job positions than we even have workers to fill them. Well, that's a recipe for wage price growth, because now employers are trying to entice workers away with higher wages. So the economy is strong when rates are rising, and the Fed is saying that we need to cool it down. So I just said that employment is probably going to be pretty high when rates are rising, the economy is doing well. And when people are employed and they feel good about their wage and about their job options, if they lose their job, what do they tend to do? Buy a home. They want to buy a home. So really the lesson here is mortgage rates matter when it comes to house prices, but the more important factor is it the right time for you in your life to buy a house? And a lot of that just comes down to job security and individual prosperity, which tend to be better when rates are on the rise. Now, if we have a recession, my gosh, I almost get tired of talking about a recession. People continue to predict this recession that's constantly around the corner. What happens during a recession? Rates tend to fall, especially in the mid and late stages of a recession, because oppositely, the Fed is saying, we need to cut rates. The economy needs help. If we cut rates, that'll entice people to want to get a loan to expand their business and keep the economy going. And we need to cut rates because unemployment has ticked up now. So take history over hunches. When mortgage rates rise, expect home prices typically rise as well. Completely paradoxical to what most people think. But if you think a recession's coming, this is how you can help forecast the future. If you think a recession is coming, expect rates to fall then. You can watch this one next.